thought I'd kick things off and shine the spotlight on Collins Foods. Shares touched a record high in yesterday's session after the company reported really strong results. Net profit soaring over 60%. With an 8% spike in revenue. Looking ahead, the company saying it remains on track to open up 24 new KFC restaurants in 2022. Drew O'Malley telling Ausbiz yesterday he's excited about the year ahead.
We're excited about our growth prospects. We've got continual growth in KFC Australia. We expect to build 9 to 12 stores this year, and we think that's sustainable for the next few years. And Europe, with the corporate franchise agreement we signed with Yum, we now effectively will be running the market for KFC. That gives us a lot of opportunity to develop the pipeline, as well as to make sure that the brand fundamentals are in place from a marketing perspective. And you add on top of that, long-term growth prospects like Taco Bell, and we just think we've got a really good future, even with all the short-term uncertainties around COVID.
Like a lot of food companies during lockdown really performed terrifically well, but a lot of those food companies have come down to earth a bit, except Collins Foods, pushed along by KFC. Claude, what did you think of the result and the stock itself?
Well, I thought the result was pretty good, actually. Funnily enough, if we rewind the clock, almost 2 years now, I actually thought that Collins Food would do quite badly in COVID, but, the opposite's been true. It barely even needed any job keeper. And, it still managed to keep growing, and it's got a record result, I think, in the half year. So the result itself was good, and this seems to be a well-run, long-term business. So it's over 50 years old, if I recall correctly. And I think that the original founder, Jim Collins, actually signed a deal for, KFC franchises with actual Colonel Sanders back in the day. So, I think this is probably a business that's been around for a while, and it's going to be around for a lot longer. So for the right price, it could definitely be an attractive one to buy. But what you've got to remember is that, they are really talking about Europe as being their growth engine at the moment. And part of the reason that growth will be slower in Australia is because Australia is actually one of the countries with the most KFC sort of per capita in the world. Like, it's very well penetrated. Now, they could still go higher than that because McDonald's has more. So, you could say that they've still got room for growth in Australia, but there's not going to be really massive growth through rolling out more stores, in my opinion. And so that leaves it to the European business, which is quite a bit smaller, about 1/5 of the size. So even if it is growing quickly, that doesn't mean that the overall growth of the company will be particularly high. And that's where you run into a little bit of a trouble, I guess, in the sense that it's on about P of about 31 off the top of my head. And also, we only have a dividend yield of 1.7%. And this is probably the kind of business where I would want to have a higher dividend yield than that, because it's not disruptive business. It's just a decent business, well run with corporate backing and good brands. So, I want a higher yield basically. So for me, this one would probably not be very attractive.
Okay. Carl, what do you think? Are they at the stage where Domino's was a few years ago before it took off in Japan and Europe? And could it follow that?
Oh, look, yeah. I'm not sure if, I think Domino's had a better spread, geographical spread. I think maybe Collins is a little bit more concentrated, But look, no doubt Europe, from yesterday's results, Europe is a key growth area for them. I don't think the Australian market will do too bad. I think for investors and analysts, I hear a lot of analysts say, they kind of don't get KFC, or it's hard for them to call it a buy because they never eat at KFC restaurants. Hey, I don't eat there either. I think I've taken my kids there once in their entire lives, Koshi.
I love the KFC. Love the fries. It's fabulous.
Well,
they
that's
also
kind of the point.
They also support great football clubs as well, so that makes it more even more enticing for me.
Looks
The
like
truth
I've
comes
stepped on
out.
a bit of a nerve there. But no, look, the point is that lots of people love it, and that's my point. And if you can get past, obviously you might not. It might not be to your taste. Look, it's a very popular brand, as Claude says. A very reliable brand. They've consistently grown their revenues for the last 5 years that I can see in my platform, and probably before that. And with all except for a tiny blip, have grown their earnings as well over the last 5 years, and most importantly, did it through a pandemic. So how about that? So I think it is a good self-managed super fund, defensive, sleep at night stock. So remember, I keep talking about finding the right stock for the right investor, and that's the type of investor I think would be more suited to this one. However, having said that, after the big pop up in the share price yesterday, it is basically at our fair value target. So I don't know if you remember a couple of times ago I was on the show back in August. It came up. I called it a buy. It was around 11. We had a target around here. It's achieved that target. So the best I can do as a result of that is a hold. We'll go back. We'll have a deep dive on the numbers, and we'll decide whether we want to increase that price target. In the meantime, I think you can buy the dip. So if it comes back into sort of 13.50, just looking at the chart, that's where the support's going to be, and it just gives you that few extra percent of upside back to our fair value target. And about a 2% fully franked yield is not awful either. So total shareholder return is probably worth it down there. So it's just a hold for me, based upon we've had a buy on it for about 18 months. Hold for now, and I might update down the track on whether we continue to buy.